Perdoceo is a small cap company with tremendous value. This is a higher education company that provides education services to those that need a little flexibility in earning their degree. Perdoceo produces classes and education curriculums that people can take remotely, and they can take it at night, on weekends, and so forth. So it's really good that people can educate themselves. Some people have to work. Some people need a flexible schedule as opposed to the traditional 4-year college. So I'm going to evaluate Perdoceo. They just announced their earnings on November 2nd. So I have a fresh set of financial statements to go through and update my valuation of this company and decide whether I should buy more shares, sell the shares I have, or just hold my shares. Let's take a close look at Perdoceo and take them through my process. Before I jump to that, do me a favor and like my video and subscribe to my channel. And be sure to leave a comment on Perdoceo and let me know what you think of this company. I scorecard companies consistently with the same process, 4 questions followed by a decision to buy, hold, or sell. And the first question is really, do I want to be a part owner in the company? Do I want to be part of this industry? Do I think the management team is doing a really good job operating the business? Do I think debt is under control and less than 3 times EBITDA? I want a discount on stock. That way I can see my investment go up in value over time. And based on the answers to those questions, I will buy, hold, or sell a particular stock. Perdoceo has done a really good job of moving online. Most of their curriculums are delivered online, which really makes it for an easy way for people to access the education. And it also lowers the cost of producing that education. If you can imagine, instead of having to build a building where people come in and into a classroom and take a course and then hiring all the facilities management and so forth, instead they could do it over Zoom and really deliver a quality education at a fraction of the traditional cost. So I like that innovation in providing higher education that Perdoceo has conducted. I like higher education, but it's not a big sector that I invest in. This is the only company that I have invested that fits this sector. So I really like the company, and it's a good sector for me to diversify into. I don't want to own all the same stocks, or I should say all the stocks in one sector, because that in itself is very risky. What if that sector really loses a lot of value? All my stocks would lose a lot of value. So instead, diversification is a good idea, especially into quality companies like Perdoceo. The company's been growing revenues nicely. They grew 7% in the most recent closed quarter, and they doubled their earnings per share in that quarter. They also reduced the number of shares that are outstanding. One area of concern is the number of registered students has gone down. So it looks like their tuition fees have been going up in disproportionately higher than the number of students that have gone down. It'd be nice to see them start growing the student population, which would then have good organic growth in combination with higher revenues. Now, the outlook was provided, and I think that's why the stock has been selling off. The earnings per share really went down. I think it was 61 cents per share in Q3, and it's really dropped. It's supposed to be between 19 cents and 22 cents a share. So that was a big drop. So that was very concerning. They should still have a very good year, but the drop in the fourth quarter of this year caused a lot of concern for investors. One of the strengths of this business is that they don't have any debt. So if you don't have any debt, you don't get in a lot of trouble, and they carry a lot of cash and short-term investments. So that is really neat to see in a business. They have over $500 million in cash and short-term investments, and that market cap's just a little over $1 billion. So almost half of the market cap is sitting in cash on the balance sheet, and they don't have any debt. So that's a really strong balance sheet. Looking at the statement of cash flows, Perdoceo has really produced high free cash for the last 3 years. It's just been one of the highlights of the business, and their cash is going to be about the same if you compare, especially year to date for 3 quarters compared to year to date of last year. The cash flow from operations went down about $9 million, but you look at the CapEx, and it actually also they spent less money on CapEx. So they're about the same place that they were last year. And they just generate really good free cash flow, which is really good to see. I believe Perdoceo is discounted by 77%, which is really a sizable discount. What that means is that each share, I believe, is worth about $30 per share, but it's being sold at 17. I value the company based on two methods. One is the free cash flow method, and I'm looking at free cash flows here. I'm looking at cash flow to be the same as last year as the starting point. And then I'm going to grow free cash flows by 4% for the first 4 years, and then by 2% to get to a terminal value. Those are some really good cash flows that I expect in the future out of Perdoceo. I'm going to discount those cash flows by 9% as a weighted average cost of capital. If the net present value of all those free cash flows is $1.8 billion. I'm going to add the cash on the balance sheet and short-term investments. And they don't have any debt, so I don't have to deduct anything for debt. So it raises the equity value of the company to $2.4 billion, but the market cap's only $1.1 billion. So it offers up a 117% discount. If you look at the cash flows this company produces, the cash flows I expect the company to produce in the future, the earnings per share really shows a company that is really fairly valued, just about a 2% premium. And that's based on a conservative earnings per share that I expect in the next 4 quarters, a PE of 12, and a small growth rate of 3%. When I discount all those earnings per share numbers, I get to a $16.89 share price or share value compared to the current share price of $17.23. So very closely valued there. I combine these two, but put more weight in free cash flow method to get to a 77% discount on Perdoceo. Looking at where the stock has traded over the last 5 years, you could really see that the stock was really trading very high in 2019, 2020. It really dropped due to COVID, but then it recovered. It really has been on a run, upward trajectory beginning in 2022 and is really up nicely. Over year to date, it's up 23.96%. The last 6 months, it's up almost 46%. Now, ever since their earnings, it's really dropped a fair amount. So it may be offering a nice acquisition price. I have a small position, but I see that it has a very healthy upside if you look at, a 77% discount on a stock. They pay a 2.5% dividend, not a humongous dividend, but they are also buying back shares. So that's a combination of very good return of capital to investors. So let's scorecard Perdoceo and see what I come up with. First, I think the business is really good. It's in education. It's the only education company that I own. And I think it's a good sector to diversify into. So I like both the company, I like their business model, and I like the sector. And the company is operated really well. They should be given a big pat in the back for moving to the online education services, which is really what people want these days. They have no debt, so well below the 3 times EBITDA. They offer a really nice discount. So I'm going to be buying more shares of Perdoceo. So that's my analysis of Perdoceo. I hope you found it interesting. Please leave a comment. Love to hear what you think of Perdoceo and education companies as an investment. Do me a favor and like my video and subscribe to my channel. I'd really appreciate that. Good luck investing in the final 2 months of 2023.